Ed, what did shareholders make of Vanessa Hudson's first profit for Qantas?
This was a pretty weird one, actually, Ross. Initially, the shares, they were up strongly, up 4% in early trade, but then investors started profit-taking in the afternoon and selling up. So the price dipped into the red, kept falling throughout the afternoon. You can see Qantas finished the day, Ross, down 6.8%.
Gee, that's a big fall, big turnaround in Qantas, is no doubt. Well, today also, a takeover landed for one of Australia's oldest and most conservative companies, the building products company CSR. The company, which started in 1855 as the Colonial Sugar Refining Company, transformed itself into a plasterboard, cement sheeting, and at one stage even into a bricks and glass manufacturer. Its key brands include Gyprock, Hebel lightweight bricks, and Monier roof tiles. Well, today the French company Saint-Gobain offered $4.3 billion to take it over. The board says shareholders shouldn't accept the offer. So, Ed, a takeover is always good for a company share price. What happened?
Always great for company shares, Ross. As you'd imagine, CSR took off today. Its market cap now at current price is about $4 billion, which is obviously just $300 million below that offer price. CSR shares today up about 5.2%.
Next one, another big one here is Fortescue, Australia's third biggest iron ore maker, lifted profit 41% in the half to $3.3 billion US. Revenue jumped 21% to $9.5 billion US. The dividend is $1.08 a share. Now get this, it's worth $1.2 billion to its major shareholders, that is Andrew Forrest, the chairman, and his former wife Nicola. Fortescue's green energy division lost $320 million US in the half. The company plans to invest another $1.3 billion in that division this year. Ed, I'm speaking with the Fortescue Chief Executive, Dino Otranto, a little later, but it's a huge payout for the Fortescue family, right?
Massive payout for the Fortescue family. The shares were actually pretty well received by the market. Fortescue, they shipped roughly 95 million tonnes of iron ore during the half. That was the second highest in the company's history, and it sold that iron ore for about $108 US a tonne, up from 87 US a tonne in the previous half. So when shipments are up, the price is up. You can see the share price reaction here against the peers. Good day for Fortescue.
Yeah, good for Fortescue. The others were down with iron ore prices. Now in 2022, Australia's biggest health insurer, Medibank, suffered one of the biggest cyber attacks this country has seen. Today it said underlying half-year profit ahead by 16.3% to $262 million. Now the growth largely came from non-resident policyholders. Strong migration, in other words, has helped the health insurer. They insure themselves when they come to Australia. Premium revenue, that's up 3.6%. The interim dividend, 7.2 cents a share. The cyber attack costed $17.6 million for the half, potentially $35 million for the financial year. Ed, shareholders were worried about those cyber security costs. I'm guessing they're not so worried now.
Well, they were pretty worried, and the attack is really still costing Medibank millions of dollars per year. So investors clearly unhappy with that. You can see Medibank shares down about 5.4% today. But it's worth noting, Medibank shares, they're still trading about 20 cents above where they were before that attack a couple of years ago.
All right, let's go to another household name. That is the media company Nine Entertainment's half-year profit dropped 40% to $114 million. It was hurt by weaker ad markets. TV revenue slumped 9%. Radio was down 3%. Publishing, which includes the SMH, the Age and the Fin Review, dropped 4%. The problem is in all these businesses, costs keep on rising. Nine streaming platforms, Stan and the property business Domain, they were the bright spots. For both of them, revenue up 11%. Nine cut its dividend from 6 to 4 cents a share. Ed, this is my old shop, I know, but when your revenue is falling and your costs keep rising, shareholders will not be happy.
Especially when the dividend's cut by a third as well. Nine got punished by the market, started in negative territory, kept falling throughout the day. Investors clearly unhappy with Nine's results. It got crunched down 8.7%. Turning to the overall market, ASX 200 opened flat today, basically stayed there all day, finishing up just 2.8 points. You can also see the Nikkei on the screen. The Japanese stock market today hit a record high due to a broad rally in technology stocks and computer chip makers. And here's the immediate reaction on the trading floor. A very orderly celebration there, then straight back to work.